Hi, everyone. This is David Lee. I am speaking English today, especially for our audience who only speak English but is in a Korean background, Korean American background. It's either second generation, third generation. I don't care. But the reason why I'm starting English the Miilk channel today is there are a lot of requests from our um, the fans and audience that I want to share your information, your intelligence, your experience with my sons and daughters at home in their 20s and 30s. But we didn't have a chance to. But I decided to move forward with the new project that only we can speak English with uh, 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 the young people in this country. So the major reason why I'm doing this is that the first generation the Korean immigrants who only speak Korean and limited access to stock market or financial information, they work so hard. They've been working so hard for the entire life. They dedicate for their son and daughters for their education and their future, but they didn't have a chance to make an investment into a stock market. Usually in the equity market, we call it. The part of the reason is that their language barrier that majority of this country's financial advisors and industry in this industry is only spoken in English, and the majority of people are white Americans. So that they have a limited access to the stock market information and intelligence. So that um, um, in general, I would say if majority of a Korean first generation immigrant uh, did invest into the stock market 30 years ago, our asset size in the Korean community could be triple or quadruple, maybe more, for sure. I'm experienced a lot with my personal experience with my existing Korean speaking client that I should have. I should have met with you 10 years ago. I could be a 3 million, 4 million. Now I only have $1 million. With vice versa, $100,000. I only have $250,000. I'm 60. But if I met with you 10 years, 20 years ago, it could be a million or 2 million. So now the the problem that we have in this country or in English speaking countries is they work so hard, they dedicate their own life, entire life, parents. They learn a lot of good things about being diligent and being working 12, 13 13 hours around the clock sometimes, day and night, without having any vacation. But the problem here's the problem. The United States, majority of people in up above, the middle income family, they make an investment so that no matter how much you earn, doesn't matter. No matter how many hours you put into your career, it doesn't matter. You don't investment, you just left behind in terms of your asset size. That's a big problem. I want make this happen for the generation to come, especially second generation, because I have two sons. And today, I invited a very, I would say, young lady in her 20s. Hi, Kristen. Can you hear me?
Yeah,
Can you
I
hear
can
me?
hear you well.
Okay. All right. So Christine is from, I think she's from Chicago. And can you introduce yourself briefly?
Yeah,
So,
for sure.
yeah.
So I'm Christine, and I'm currently 22 years old, and I live in the suburbs of Chicago. I am a recent college graduate of Washington University in St. Louis. I just graduated this May, and 2 weeks ago I just started my corporate job in marketing. I have a degree in marketing and econ, so I'm very excited for that. I'm trying to learn all about the investing world right now, but there is a lot to learn. But my mom is a single mom, and she worked very, very hard, and she, taught me like the value of money. And she recently got into investing because of David. So
Yeah.
I want to learn from her and you to, really be able to manage my money well, and invest for the future, like you just mentioned prior.
Yeah, first of all, congratulations on your having a new job. That I think is a very excellent opportunity to grow your wealth. It's a big company. I can't tell the exact name, but I'm glad that you got the job recently.
Thank you.
How'd you like your job?
It's been really good so far. So
Uh-huh.
I'm working for a really large CPG company, so
Uh-huh.
consumer goods.
Okay.
The company has been really good on learning and development, and I haven't started like my actual project yet because I'm still in training. But it's been really exciting, and I'm learning a lot, so I'm excited.
All right. You have a good luck, and I hope that you can have a great time with the first company they work with. And now, so I've heard that you have a lot of questions to me, and any questions you have in terms of financial investment, just let me know. What would be the first question?
Yeah, so I have a few questions written down. The first one I have is really kind of more like a personal story, like a personal experience that I'm going through right now.
Uh-huh.
So, like I just mentioned, I just graduated college and I started my first job. So I'm making a lot more than I ever had. But right now, I'm currently living at my mom's house because she said it was, the best way to save money to put in investments. But obviously, as someone in my 20s, I want to move out and have my own place. So like, there's this debate right now where should I stay at home or is it okay to move out? So I was wondering from your experience and expertise, is there a way to effectively invest if I move out, or is because at that point I would be financially independent if I move out from my parents' house, or is the best way to stay at home in order to make those investments?
That's good questions. I think it is related to my sons too. My sons, after graduating his college, I hope that he can stay with us to save more money. Here's the thing: when we were in our 20s, the average the the price of a house is cheaper after even considering the inflation rate. For the first or second year, maybe third year, if your income is lower, you can save a lot more money than now. The reason is that the rate of the price of the home is outpaced the rate of your salary. I know your salary is high and somewhere here, but the house prices went up a lot faster rate. So in other words, in order to be financially independent, it takes a little more time with your parents for sure. So we're living a different age right now, and everything, especially in the Bay Area, the cost of living is tremendously high. So you only have a couple of years experience, so you just get a job. You can save a lot of money because your cost of living is a lot higher than you expected. So hopefully you can stay a little longer until you are ready to go out and you're financially secure than now. That's gonna be a little over maybe 5 years. I don't know, but it's depending on your saving rate and your investment. But hopefully, you can stay a little longer. That's the current trend. It's a current trend to stay with their parents a little longer to become more financially independent.
Mm-hmm.
That's what my suggestion. Don't be afraid or don't be shy on saying that you're all staying with your parents. Your parents. There are a lot more kids are staying with their parents, even over 30s. But nothing is free. You are you're not you're dependent on your with your parent anymore. So you have to pay some token of maybe rent for your for your parent, your mom. Should be
No, my mom's letting me stay here for free.
yeah. It's nothing is free. You have to pay a little more. She might have a little mortgage. Who knows, right? So
Mm-hmm.
that would be more. I would say good for your future. So even between your relationship between you and your parent, your mom is really close. I know that. But even though financially, if you want a financial independence, uh, what doesn't make sense is that you have to pay for things that you spend in terms of time and free space and food. That's nothing for your. There might be nothing for your mom, but that's the way we are more like into financially. I would say independent individual. I would say that's I put that way. So you're gonna feel in the future, but you don't have to pay a lot, but it's kind of token of I would say gratitude. You have to pay a little more so that you feel comfortable. You feel more free. Okay, so that's what I would do for you.
Got it.
Yeah,
Yeah, that makes a lot of sense. I
yeah,
think like
hmm
being young, and like having my own place in college,
yeah,
I'm like I think there's always this struggle with like young people like wanting to move out,
hmm
and that's definitely like a lot. There's you can have a lot more fun temporary, but
hmm
just yeah, based on what you said, it seems like for the long run,
uh-huh.
it's a way better idea to stay at home to save that money.
Yeah, 20 years ago, 30 years ago, independent after your college is one of the things that you have to do for every youngsters. Nowadays, interdependence is more important than independence. Independence is almost extremely difficult and socially, in terms of education, financial independence, and social structure and system doesn't don't allow too much for your young people like you. So we call it Z generation. Uh, to be financially, especially independent, is extremely difficult. That's reality. So you don't have to be afraid of living with your parent. It's for your interdependent. So
Mm-hmm.
okay, your mom is depend on you. You depend on her. That's a good thing. So better deal with than independence.
Mm-hmm.
Okay. So what's the next question then?
Yeah, so kind of on the same lines. I was wondering, like, since I'm 22 right now, and since I just started my job, I have to learn how to, budget. So I was wondering what you recommend, like, what percentage I should be saving right now, as someone that's in my early 20s,
Yeah.
and what type of investment should I be looking at? Because right now I just started my 401k. I know my mom started a Roth IRA for me for a few years ago, but in terms of like stocks or like ETFs, like how to build a portfolio, I'm completely lost on. So was wondering about that.
Okay. My recommendation would be you enjoy your age. You're in your 20. You're 22. You have to enjoy your life. You don't know until you get old how beautiful you are as a man or a human being. So you're gonna have to enjoy your life and your lifestyle. That's the first thing I will do. But financial independence for the long term, this is a long term project. It's not 1 or 2 year, 3 years project. This is going to be 20 years, 30 years project, becoming literally independent. I would rather go, you maximize your 401k plan. You have a fund selection. Your company offers you 50-50, I would say, right? They match your 401k, right? Pre-tax money. So maximize it. So you have to minimize the after-tax the money that you take from your company. You have to minimize it. So that, and then within the 401k plan, you stay away from target date, which consists of only almost 80% and 100% bond fund. You don't want to deal with the bond fund forever. I don't want to deal with it because your 20s, you're more like better off to invest into security. I mean, equity market with large cap growth. So you're not going to take the money out until you retire, which means you have a time horizon. How many years? 30, 30. Oh my God, 36, 7 years down the road. 37 years. Your money now will be, I mean, it's going to be, rewarded to you. Could be, now is let's say a $5,000 could be $1 billion at the time when you retire, right? So now your $10,000 now is $1 million when you retire. So don't underestimate the savings, the money. So don't put your savings into your savings account. Every month you have savings. I don't know how much it's gonna be, but you transfer it out to pre-tax investment account. Okay, so you maximize the 401k plan. Now you have some savings. You have a discretionary income. With the discretionary income, you make an investment into stock market, and then. So we call dollar cost averaging, which means you don't want to buy one share, okay, every month. You'd rather go $200 share of a stock, okay? That's the dollar amount is more important. Same fixed dollar amount is more important than same number of shares. Growth rate is different. Dollar focused investment, fixed amount is more important than, again, the fixed amount of shares. Do you know what I mean? Let's say you have a $500 in discretionary income. You make investment $500 every single month. That grows a lot faster than fixed shares number, okay? That's the way it is. I cannot tell you what it is. That's how it works, okay? That's a good thing. Now you have a pre-tax IRA account. If you want to minimize your income tax because you're single, right? Your tax bracket is higher than couple, married couple, right? So that you have to minimize your tax rate by making investment IRA account, not Roth IRA. It's a pre-tax money. Simple IRA is pre-tax. You have to take pre-tax money out of the way so that you have to minimize the tax rate. That's good. That's now is 1 or 2 years or 5 years even. You cannot tell difference, but as time goes, the difference is guys like this much. All right, you got to be. Start small, you're gonna get big at the end. The difference, $1 million difference, okay? This is a $1 million answer for you for your entire career in your lifetime, okay? Even if I'm gone. What's the next question?
Yeah, so other than the stock market, I know with like recently cryptocurrency has been super, popular within like our generation. So I was wondering, it's I know it's still very volatile right now,
Uh-huh.
but do you think it's a good investment to make, or put in the portfolio, or is it better to just stick with the stock market?
I don't want you to make a huge investment in the cryptocurrency yet, but you may invest a few because I don't know what's going to happen to cryptocurrency. But apparently, it's not a asset class, which means one of our investable asset, bond, stock, convertible bond, ETF, mutual funds, futures, hedge fund, things like that. It's not asset class. But just like gold, the gold, you're not owning a gold, but you make an investment in gold ETFs and gold related investment vehicle. It's just like that. Gold is fluctuating, the prices are fluctuating, but as the supply and demand, that we are having the price range, right? Okay, so 1,000 per, things like that. So even though it's not an asset class, is investable financial tools, I put that way. But majority of investment company like us, advisory group or for us, we wouldn't recommend a direct investment into cryptocurrency. Instead, I would rather go um, uh, the trading platform. There's a platform business that you can trade um, uh, that we call it Coinbase. Do you ever heard of Coinbase? Or there's a block BROK. These two securities are investment investable asset, I would say, because you are not you're not exposed to a high risk to making direct investment into stock cryptocurrency. Instead, you are making investment a company that's trading cryptocurrency, so which is much safer and less volatile. So these two maybe is, and then the more volume you're trading into the cryptocurrency, they're making a lot more money. So I think it's a better way for now. I would say you can invest BLOK or coin. The ticker is a COIN, Coinbase. Okay, that's the thing I really into it. Any questions? So,
Yeah, so the last question I have is, as I'm trying to figure out how to invest in stocks, how should I go about doing the research? I've heard of like doing a technical analysis, and then
uh-huh.
there's fundamentals. Um, and I heard with fundamentals, it's more for long term. So
Yeah.
I was wondering what your opinion was on, how I should go about research.
Um, so you open an account with any major investment companies. They provide you basic analytical tools, analysis, and all that about a company you hold in stock. So you have to review it for sure. You open an account with the Bank of America Merrill Lynch account, Merrill Edge account, for example, or any banks. They have their own uh, advisory group that you have to talk with them, and then you have to review it. And the more fundamentally, you don't own a high risk, high return fund or a stock for now. You can take um, uh, at least mid cap or large cap companies that grow um, with minimum risks. So that fundamentally you have to buy a good stock, and according to the good stock, you can review it which ones are better off in terms of growth and less volatile security. So, and then the secondly, you can talk to me, people like me, okay? You open an account, you can have some help from the people that in this industry. They'll provide you free analysis about a company, about the stock you have. Thirdly, I would go say that the most important aspect on making I would say fewer risks, less risks, fewer mistake would be you go by your fundamental analysis, how much money, how much revenue they're making compared with the last year, this year, and then the year before, is growing and is not growing. And how about the profit? How about the cash position? It's related to you too. Like you have marketing field. The marketing, when you do marketing, you have to understand the company's performance in terms of financial performance. I would say it's all about you call it fundamental analysis. So basically, you have to learn the terminology that we use in the financial sector. That we have a lot of the definition of a thing in making investments. So you are going to learn basic definition of a word in financial industry. That's the first step. That now, when you're ready, you can go over to. It's all about all about public information. You can download from their website, their 10K, we call it, annual report. You just get used to it. You try to read it. You don't understand a lot of things. It's all financial the buzzwords. So you just get used to it. That now, as time goes by, you learn it. You get more good grip of understanding financial languages. It's all about the language. Okay, and then though it's gonna be the last question, I would say. But
Yeah.
you asked me any credit card that we did go through.
Yeah, so I was wondering with so I have currently like 2 credit cards.
Yeah.
So do you suggest using credit card or using a debit card or yeah, that's my question.
Yeah, that's a good question. That's great question for your age group. So because you started your own career, you start working for a company, I highly recommend having a credit card. Use your credit card under your control. Okay, you have to control and pre-plan your budget on a monthly basis. If you can control, I highly recommend a credit card. There are 2 reasons. A couple of reasons. Number one, you have a 0 or very basic credit score. You have to build your credit scores. As time goes by, you pay, you spend on the credit card, you pay every month 100%. Even if you're $100, $200, you go out with get some teas, coffee, blue bottle coffee is cost about $5. Even if that, you have to plan that is a maximum spending limit. You have to put yourself. The credit card offer you $1,000, $3,000 max. Even I have an unlimited card, but anyway, you got let's say $10,000, for example, $5,000. You don't want to go over it, so you go under control. You spend every single month on purpose, $100, $200. You pay off right away before due date. And as time goes by, your credit scores go 600, 650, 700, now eventually 800. So when you buy a house or purchase a car or get a loan, your loan rate would be a lot less than your competitor or your average, your age group. Okay, people in your age group. That would be very different when you are getting old. Okay, that's why. And then secondly, so let's say you use debit card, someone just hack you, and then someone used your debit card on your gas station, $100, maximum $100. They pay for their merchandise, the purchases at Walmart. If you use your debit card, you're not protected. If your credit card, you call the credit card, hey, I got hacked. Someone is using my credit card. Then they block it. All the amount they spend, you can get. You don't have to spend out of your pocket. They will take care of it. There are two reasons. So don't use your debit card. Your debit card is only used for just in case. Okay, you use your ATM. That's it. So you have to use a credit card for now to develop your career, a financial career is better off. You will see when you purchase a house, you will see, oh, this lady has 850 credit score. I'll give you 2.5% mortgage rate. Other guys are 3.5. 1% difference when you're 30 years of mortgage. Think about it. It's $500,000 difference. Okay?
Yeah, that was great advice.
How'd you like it? How'd you like a first interview with me?
It was really good.
It helpful? Is it really help?
Yeah, it was a lot of great advice. I learned a lot through, I think, maybe 20, 30 minutes that we talked. So thank you so much for your advice and talking with me today and going through all my questions.
Okay. All right. Hopefully I can see you next time for our next trip to Chicago, hopefully sometime in the future. And take good care of yourself, and hope your career goes way up here. Okay. We have discussed way up there. It's a management soon. Okay.
Yeah.
Okay.
For sure. It's only starting, so there's a long way to go.
All right. Again, thank you for coming out on our channel, and hope you see you soon. And say hello to your mom.
I will.
Okay.
When she comes home.
Bye-bye.
But yeah, thank you so much.
Thank you. All right. For about half an hour, we was discussing a lot of different story with Christine. Hopefully, this is helpful for your better decision on your financial. I was the better decision for your financial wealth. That we just started here, but we did not pre-plan what we should talk about. But we're just started it here. I'm trying to give me some feedback. What you think about where should we address in terms of having a good thought and financial help from me. So there are many financial advisors and investment. The people like me, there are so many people, like 20,000 or 30,000, maybe more. And I'm a CIO of small companies of 24 people, but I'm only one who could speak Korean. But if you give me some feedback, that will be helpful for us to make a better decision to move forward with the English version, the Miilk channel. So, and then what else? You have to edit it, okay? And I realized today's interview with Christine. Thanks for her to be honest about her opinion. And I think we have a lot of room to grow to make our second Korean community, our second generation, third generation, to develop financial knowledge, and hopefully they can gain access to better financial investment tools using our YouTube channel. Thank you for watching, and I hope I'm looking forward to getting some feedback from you guys for in your 20s and 30s. Thank you. Bye-bye.